Hey there, folks. I'm going to wrap up the week here with the market internal review for Friday, October 20th, 2023. So, a nice sell down here towards the end of the week. Thursday brought in a little bit of volatility with Jerome Powell. We had a breakup high here right around the midpoint of Wednesday's TiWAP first standard deviation range. We hit it not once, not twice, but three times here. You can see on that white line there, that is previous TWAP. That would be from Wednesday. So quite hilarious how many times that was hit. We did have one strong break right below. This was the cleanest setup for the rejection of that range. And we actually had a fantastic break and retest style entry. And we even got if you watch the last trade review video I made, we get one of those in shape kind of candle patterns here, broke into the standard deviation range from the high, risking just above there. And you target basically the full range here to the downside in this case, since we're breaking the low. And we didn't get all the way down to the end, but boy, we sure made some good progress. Trim out on some of these, and I mean, definitely it's a 3-to-1 trade. Probably best case scenario, about almost a $5 move on SPY. Sadly, this day had a lot of inconsistencies with the internals and just how things were being popped up. And we had this long period of chop that we typically will have for JPOW, but this whole area here breaking up into the mid-range definitely gives some pause to see if perhaps we're adjusting sentiment. Looking at ad on that day, you can see how many times they broke zero on the ad. So very interesting. But in the end, sold off quite a decent amount. So that brings us into today. We have a very small daily gap, about 50 cents. And looking at Mercy, we get that overbought and the crossover here by about 10 o'clock. It looks like a little bit sooner than that, 10:50 or 9:52. And that's actually where we have a very nice breakdown of first standard deviation low. We get that retest, and then we get the final close right over. It does this a handful of times, and trend is nowhere to be seen. And they're right at open. We're really low tick to either end. Neither the buyers nor the sellers are providing any kind of strong tick. And that's where effectively we just sell off, clear into 2 deviations down on SPY. This move here captured just shy of $3 or maybe $3, depends on how you manage everything. But every strong close into that first standard deviation low was immediately reversed. We got one time, two times, about 2 times there. Then we finally start to have a little bit of relief for the low end of the market here, zigzagging through. So midday, we have a lot of chop, and I think there's a good reason for that. I'll go and show that here in a moment. But overall, look where we landed here, right about 421 at the end of the day. There's a couple of really big important things about this. We almost hit if I turn off fourth deviation here. So we hit fourth deviation, but we broke the third deviation on the low end from Thursday's range. And that's really where we kind of retested that. We didn't even retest the first standard deviation range, which is what I was looking for today. So didn't quite get that. But if you go look at VIX here, we crammed up against 20 a handful of times, or 20.5 rather, and we even saw a little bit of bounce back towards that even late into the day, until we finally landed on almost 22. So 22 is just 30 cents away. Notice though that the ad basically channeled the whole day. We had this intermediate low that we made early morning before we broke that down. We retested that twice. So interesting to see the price of the New York market not really following through, or the advancement rather. And then the volume, however, is quite tremendous for the downside here. So lots of volume into the decline pretty much all day. We had a handful of tests. That's why I love these levels here on the Vold. And I mean, just so many times we hit that. Finally, after clustering around this low level here, we finally broke it and just really went off the deep end. So for the multi-time frame, monthly TiWAP kind of analysis here, looking at where we're at on the composite index, monthly TiWAP first standard deviation low for October, we officially broke that. One of my last videos, I mentioned that, with us breaking the monthly TiWAP across all the indices, I'm not really looking for upside at this point. I'm thinking that since we've already visited the highs, it's going to be quite improbable that we would find a way to retrace back up there. It's been so typical in these selling months where we'll struggle in the beginning of the month to find footing above the monthly TiWAP. Once we finally do, and we don't stay there that long before we finally break the monthly TiWAP and head back lower. So honestly, today I was kind of expecting us to test down to here. That's why I have this pink line. That didn't occur. We hit, gosh, almost two. Let's see. Yeah, not quite two, 1.5 standard deviations on the composite. But look at all this struggling right around that first standard deviation low. So I'm personally not going to be surprised if we don't test within this range coming into next week. But I definitely consider us to be heading towards testing at least these lows from earlier in the month and possibly lower. SPY per the monthly TiWAP. So Thursday we already had lost it, and coming into today we basically had a little bit of a capitulation right here at the first standard deviation low, but very little resistance to going back down. And that, again, it's just kind of more of the same. Pretty much everything was in lockstep with the broad market. Same with the Qs today. Finally, we didn't have Qs trying to invert the whole market. You can see with Mercy here, it's very well aligned to the New York Stock Exchange. Every little peak on Mercy is from the formula I've put together and the weightings I've put together for the whole set of market internals, and Qs is essentially following them to a T, which has been highly unusual. So very clear rejection of the daily gap, very clear rejection of first standard deviation low on the month. Just like SPY, we lost monthly TiWAP on the 19th, Thursday. Dow, same thing. It is, I'm not even going to use the word stronger, but it's still in the first standard deviation on the month, but just barely. It bounced it and kind of waffled about, but there's no strength there for upside that I can see. Russ is definitely the worst offender. I had tweeted this out today that I'm watching for this range to break for us to have even more downside, and they took all day to do it. We definitely did break it around 11, and I think about 11. Let's see. By 11, I think is where we kind of hit that low point. Yeah, that's roughly about where we hit the low point, and then look how long it took SPY to find a new low for the rest of the day, or it took the rest of the day rather. So past that time, we have by 1:30ish is where we're testing previous day low on the Russ before we finally break this level down and really head off much lower. Now, the reason I called this out is because this index, the Russell, This is the third deviation low for September. So this range basically just says, we're pushing below September's data plus a little bit, right? The standard deviation that was calculated is the plus, quote unquote, plus a little bit. So this is uncharted territory as far as my indicators go. I can add fourth, fifth, and sixth deviations to this to provide more levels, and I'll be doing that whenever we run out of deviations. I just add more that are all based off of the data, just further projections that probably we wouldn't reach, but in this case we're having a very hard sell. And from the last video I said we're hitting the lows, and for Russell, the best case scenario for the upside case would have been a bounce here and start to find some relief, and that did not happen. Thursday we sold off, obviously, and then Friday today we've just continued it. I mean, where there was no buyers present for buying back into the range for Russell. So previous day low and high from Thursday. I mean, we had, I guess, one little engulf, or not little, but one engulf candle here before we just get smacked right back down, and that was it. The most, to me anyways, amazing thing is this this SPY breakdown that I have been covering for quite some time. I mean, definitely since earlier October, since the 9th. That was 11 days ago. I basically have been calling this out, what I'm looking at and what I would expect to help me set my bias. So these two candles here, I said, would be important ranges. Once we broke above the 20, I said I'm still not considering a bull bias at this point, just because of many other factors. So we were not able to clear the 50% of this gap area here on this SPY daily chart. How many times? Once, twice, 3 times, 4 times. And I said if we finally have some downside, I'm going to expect this candle here to potentially provide resistance at the 50% mark, as well as this candle here would be kind of like my final target area before I would expect potentially a bounce. But I could see us stopping here. So we did stop there almost to the cent the 13th, as I've covered. We had a couple of sideways days. I mean, these are just range bound, right? This whole area. We take this up. We did come higher technically on Tuesday, but then Wednesday and Thursday we've done nothing but sell. Now Wednesday was interesting because we closed just above the 50%, and we did wick below this monthly trend line that I've had for quite some time. And I had just a small sliver of hope that we would maybe see a little upside. And I mean, technically we did Thursday. We tapped the 10 SMA. We tapped the top of the range of this bar here, but all this here, I think, was just building an immense amount of participation, such that it would take quite a lot of buyers to bring us higher up to that point, and nobody's up here wanting to buy. So the Thursday has us wicking the 50% of this candle that I had pointed out a while back, and obviously ending the day with closing below this range. So that, to me, in my mind, just kind of set it up that we're definitely bringing this lower. How much lower? I was kind of targeting the 200 SMA, and the 200 SMA at the time, was about 422-ish. So when we opened today, we opened just slightly above 425.8, 426, right above the 50% of this. And just kind of had to have a chuckle there because just because of everything I've been pointing out on my videos. And then they kept selling it lower, and to me the 200 SMA was definitely a good potential target, so 422. And if we come back and look at this, 426 was somewhere, right around the daily gap. So we didn't find any buyers there. And then that 422, where's 422? So 422 is literally, oh, I don't know why I didn't draw it there. So 422 is almost that low right there that we hit a couple times. So us closing below here is very interesting. And, honestly, I really don't have much really to say at this point about what to expect. With us closing below the 200, I think everybody and their brother that has been trading for a while understands the significance of 200 SMA. I mean, it's literally what it seems like everyone is using to determine some kind of trend bias on a higher time frame or even lower time frames. And going back now to early March, look at how many times we closed once, twice, many times we closed under the 200 SMA before we finally found a bottom and started coming back up. And that's where that monthly trend line was that has all but essentially been invalidated. I think at this point, I'd have to go higher time frame to see if these are wicks or if they even register. I mean, we have not closed the October candle yet, but we're getting pretty close. So I highly doubt we're going to come up at this point. We've got the 50 under the 100. The 1020, yes, is flipped, but it's just not looking real great for the upside. So what that could mean for us, I'm not so sure. We've got a range down here, 416 and 405, but that's honestly just that's just a little bit of guessing. But we have the relative tops here from February, so that'd be like 416.5. Maybe we'll find something there and we'll pull one of these jabbies. So like I said a while back, I'm expecting the SMAs to be quite a mess over here. So this strong of a drop now, they could bounce us, but we've got a handful of global events occurring, and the bank earnings did not bode very well for market confidence in any of the participants that are providing much of the movement we all enjoy. So I'm just going to be taking it very slow. I'm going to be using the monthly TiWAP levels and just kind of keeping it a little simpler with VIX as high as it is. That's usually a really good opportunity to trade a little differently, at least for me. So, I guess my word of caution to you is if you've been doing well with these slower, more methodical kind of trending moves, be ready for a lot more quicker movements. If you're somebody that likes to grab tiny little scalps over and over and over again throughout the day, this might be the kind of market for you when VIX starts to rise up. But it's going to be challenging for people that have been used to grabbing these kinds of moves. I think it could always be the same but different. So looking over at the RSIs, I mean they're all downtrending. One thing that was noticeable to me this time is that energy wasn't necessarily following suit with being kind of a divergent indicator. So energy is coming down. Pretty much everything across the board is coming down per RSI. In the past, you can see this thick white line is SPY's RSI. Look at energy. Energy is going up. And SPY's RSI is coming up. Energy's RSI is going down. So we've seen them in lockstep a handful of times, but like even here, SPY's RSI is going down. Energy is going up. So a little bit interesting this time to see SPY's going down and energy's going down. I haven't looked at individual names, so maybe it's like the top holding had earnings or something, and I just don't know. That's pulling that down. But looking at our growth stocks, pretty pretty good indication, top detection there, right at those 50% tests of that range that I pointed out many times. So boy, that this continues to be a really good top indication. So time of death October 17th, pretty clear. So I'm gonna keep watching this. If we head back down here again, perhaps there'll be a relief bounce, but we're not even back at that 25%. So TBD on that. All right. Well, like I said, I'm going to be very cautious heading into the rest of the rest of this month. Definitely going to probably head lower, but looking at next week, we do have some data release. I don't know how significant this kind of stuff is. Red Book year over year. We do have some PMI. I don't know if we have any Fed speakers. Let me do high impact only. That might help. So GDP, that's high impact for sure. Yeah. So a couple of things, right? But we've got until the 31st, and there's not a whole lot else other than GDP. Oh, never mind. Well, Fed Chair Powell. So Powell's back out on the 25th. I know he was ushered off on this last one due to protesters or activists or something. So I don't know. Maybe we'll have some spice then before the end of this month. Seasonality wise, this was supposed to be potentially a green month, so it doesn't look like that's going to occur. But I don't know. Hang in there, I suppose. Anyways, hope you had a great trading week. Hope you had a good day today on the markets, and hope you have a great weekend. As always, thanks for watching and happy trading.